Stop trying to trade 10 charts at the same time and pay attention. Bitcoin is sitting at a make or break level. Ethereum is inside a zone that we've been waiting on a very long time. And right now, the market is forcing decisions. Nothing dramatic yet, but pressure is clearly growing. This is not the part where you get excited. This is the part where you sit back and you watch how the market plays out. In this update, I will walk you through what just happened on Bitcoin across the daily, 4-hour, and 2-hour time frames, why these levels matter more than people realize, and what confirms strength versus weakness from here. Then we'll move to Ethereum, where a trade is now active, and I will explain exactly how I'm managing it, what must hold, and what would completely invalidate the idea. No absolute opinions, just structure and behavior. Let's go! Before we go further, make sure to hit that like button. Also, don't forget to subscribe as well. It helps me more than you think. And it tells me you want more of this type of real-time market analysis, people. As you know, I'm running a fully public trade challenge, growing an account from $10,000 to $100,000. I'm not forcing trades, I'm not reacting emotionally, I'm sitting on my hands and letting the market come to me. And by the way, we have 3 trades so far: Render, Link, and now Ethereum, which I'm going to be talking about in this video. All 3 trades were shared live in my free Telegram channel. Make sure to check it out. Before we go into the charts, I want to zoom out for a moment because something very important is happening in the background. Strategy, formerly MicroStrategy, is once again proving that European capital is prepared for Bitcoin. Not in headlines, not in hype, but in allocation.
That's right, because we have not had a Michael Saylor impression in quite a few videos. While that may be concerning, I want you all to know that I am convincing everyone in the world to invest in strategy. Now, I have to say one thing. If you can't handle a 95% fluctuation in the price of the stock, then, my friend, the stock market is not for you. I would recommend opening up a savings account at your local bank and be happy with the no yield that you get from there.
Thanks, Michael.
You're welcome.
At the same time, real-world assets are quietly bridging TradFi and cryptocurrencies. We're seeing institutions move on-chain without giving up security, compliance, or guarantees. Networks like Aptos are becoming invisible rails, supporting high-value financial activity in a way most people don't even notice yet. And this isn't theoretical. These rails are being chosen by names like you-know-who, Larry Fink and his company, FTDA, and Pact Finance. This is the part most people miss. While retail is watching candles, infrastructure is being built quietly. We're also seeing Circle roll out new developments that are improving automation across chains, reducing operational risk, and improving speed for real financial use cases. This is not about memes. This is about systems. Historically, markets break before they reconnect. And when capital starts growing quietly, price usually follows after. This just in. Bitcoin is now officially out of the closet and allegedly being courted by Peter Thiel. Guys, okay, I just had to do it. I couldn't help myself. And by the way, Irina, just so you know, I am not gay. Now, let's bring it back to Bitcoin on the daily time frame, shall we? Right now, Bitcoin is sitting at a key level, a make or break level around the $88,000 area. Previously, we saw a bullish fake out around the $96,000 area. Price pushed higher, lured all the top tickers, all the people who must love buying the top, and then they got hammered as this thing pulled back into the trend line. What makes this moment special is the trend line. This trend line held for a long time, and this is the first time we've seen it break aggressively, almost in a single candle. I mean, check that out. Now, price is sustaining below it. That tells me something important. This is no longer just noise. So now the question becomes very clear. Is this a breakout retest that leads to a continuation lower? Or is this the kind of failure that traps the shorts and reverses back up into the range? I am not choosing a side yet. I am not getting married to an opinion. I am watching how price reacts at this level. Let the market tell you. The easy part is to let the market show its hand. The hard part is to wait. On the 4-hour time frame, one level stands out very clearly, and that's the 90,500 area. This level supported Bitcoin 3 separate times previously, but once it broke, price came back, but demand was missing. And that's a big detail. Former support failing and turning into resistance is usually a sign that momentum is shifted, but not completely broken, just shifted. That means the bullish argument becomes less likely unless something changed structurally. Below that, we have our key pivot support around the $88,000 level. This level extends to the far left. Historically, this is where Bitcoin has consistently found buyers. Now, I've talked also a lot about this level with the Wave 4, Wave 1 overlap on the broader fifth wave. I'm not going to get into that here, but that is a major level in many ways. Now, if Bitcoin closes below the 87,260 level, then in my opinion, the bears are back in control. And the bearish scenarios open up much more clearly. But until that happens, this is a clear decision zone. This is not a bear structure yet. On the 2-hour time frame, Bitcoin is still technically maintaining itself above its key support level. If bulls want control back, price needs to prove it step by step. That means a pullback into the support, followed by strong bullish candles and acceptance above levels that previously rejected price. First, the 91,500 area, then 93,500, then 95,850 area. Not guessing, not hoping, just watching the price behavior. Okay, let me take a step back here and give you a proper update on the trade challenge because this part matters. Right now, the account is sitting just under $10,500, up $499.23, which is a 4.99% gain so far. 2 trades, 2 wins, no high frequency. Those trades were Render and Link. The third trade is Ethereum, and we're going to talk more about that in a moment. And so you know, all of the trades in this challenge are done on Weex. That's the platform I personally use. I like it because it's clean, it's fast, and it doesn't overcomplicate trade entry, especially when things start moving quickly. On top of that, every single trade, entries, exits, risk, results, is tracked using profit precision. That's how I keep this challenge transparent. No changing trades, no putting in trades after the fact, no rewriting history. If the trade works, it's logged. If it doesn't work, it's still logged the same way. And I want to be very clear about something here. Even though the market is moving fast, even though the expected range has picked up, I have not put on any random trades just to stay active. I don't trade just to trade. That is intentional. This challenge is not about taking every move. It's about waiting for a very precise situation and only acting when price comes to our levels. And most importantly, all setups, ideas, and updates are shared ahead of time in my free Telegram channel. Not after the move, not in hindsight. And if you're signing up to Weex or checking out Profits Precision, all the links are in the description. Using those links supports the channel, but nothing is mandatory. Let's take a step back and take a look at Ethereum on the daily time frame. Right now, Ethereum is doing exactly what I had been anticipating. Price has pulled straight into the daily order block that we've been mapping out this entire time. This is not a random level. This is a major inflection point. What just occurred here is very important. On the left side of the chart, Ethereum swept the sell side liquidity. That move was not an emotional move. It was a mechanical move. Liquidity was consumed, weak hands were cleared, and price was pushed straight into the higher time frame demand. As of today, Ethereum is still maintaining inside that zone. Nothing is confirmed yet, but historically, every single time price behaves like this, liquidity is consumed first, then acceptance into a daily order block, the market slows before establishing the next leg. There is one level that matters more than anything else right now. That is the 2772 level that you see right here. As long as Ethereum does not give a daily close below that level, this continues to be a valid bullish context. If this level breaks and price accepts below it, then the narrative changes completely, and I will adapt. But as of this moment, Ethereum is still inside the area I wanted, reacting the way I wanted, and this is exactly why patience matters. This is not about forecasting some type of big bullish story. This is about letting the market reveal its hand and adjusting to it. Now, let's get into the 4-hour time frame because this is where the plan turned into a trade. First thing to be clear about is my limit order has been activated and I entered the position with a 0.5% risk, not the full size. This was intentional, but why? Because this order block is a very strong level, and there was always a chance that price would tap the zone and then move up quickly without offering a clean confirmation entry. I wasn't willing to let that happen after waiting for the setup for so long. So I used the 0.5% opportunity cost, not FOMO. That's a big contrast between the two ideas. FOMO, the fear of missing out, is emotional. This was planned. Now, after entry, price had done something very important. It never actually sliced through the order block. It stabilized. We started seeing strong bullish candles. Momentum shifted, and the bears stopped pressing. Structure stopped breaking. That's when we had that change of character and this initial bounce. That tells me the market responds to the level. But here's what I'm watching next, and this is the most important. I want to see Ethereum hold above the 3,052 level with acceptance. That's right here, this high right here. This level acts as confirmation. If price continues to respect this area and structure continues to be intact, that's where I'll look to add the other 0.5% of the position or the other 0.5% of the risk. Not before, only after. The structure needs to change. The invalidation is still the same. The 28.49 level that you can see right here. If price loses that level, I'm out. No hesitation, not getting married here. This is your prenup. It's going to cost you something, but you'll be out. Right now, I'm not putting on any more risk. I'm not forcing anything. I'm simply managing the position and adjusting to the market. This is how you trade professionally. You plan, you wait, you trade when criteria is met, and then you let the price handle it from there. So this is where we are. Bitcoin is sitting at a level that decides strength or weakness. Ethereum is inside a zone that historically matters. One trade is active. Nothing else is forced. While price is uncertain, capital is quietly growing infrastructure underneath. That's usually how transitions look in real time. Most people are reacting to candles. I'm watching how the market behaves over time. By the way, all trades in this challenge are done on Weex, the platform I personally use. Simple, clean, reliable. I track everything on Profits Precision, so the challenge stays transparent. All ideas and updates are shared live in my free Telegram channel. Links are in the description. I will see you in the next one.